Greetings, fellow investors. We had another fabulous week in the stock market getting those unrealized gains. But you know what's already realized? Yep, that's right, my August dividends. This is the best kind of income, money that I didn't need to lift a finger for. This is part of my February, May, August, November tranche, and I've already received more income than in May, and I can all but guarantee that I will be making more money come November. I've also been receiving plenty of dividends in September, which falls under my largest tranche, so be sure to check out that video when it comes out next month. And this is why I love dividends. That's because these are somewhat predictable, unlike growth stocks where you don't really know when that cash flow is coming in. I make these videos every month going over my dividend investing growth journey, so be sure to show your support for the channel by hitting that like button, subscribing, and we can grow together. It's also totally free and it really helps me out a ton. So before we actually go over all those juicy dividends, let's take a look at all the prep work I do every week to make those dividends possible, actually going out and buying those great companies. So I keep putting in a fixed amount of money and just buying more equity of these great companies. I also appreciate everyone who wished me well after my little vacation earlier this month, and I'm just happy to announce that I am happy and healthy and doing well. So actually, the very first stock that I bought more of this week was JP Morgan Chase, and that is one of the largest banks in the world, and it's led by the great Jamie Dimon. This stock has not recovered since the C19. It's basically been trading sideways since then. I made the huge mistake of buying near all-time highs, near this 140 mark, and that has my average cost pretty high on this, but I've been working on trying to get it down here. And this stock really looks like a bargain for me here. It's still at $93, low 90. And I do believe that Chase is just going to be able to continue to do great things in the future. I mean, people will always need loans for houses, for businesses, if there's any businesses left standing after this whole fiasco we've had this year. Also somewhere just to park their cash, help with retirement savings, investing for those who aren't as financially savvy as us, and you're getting almost a 4% starting yield while I wait here. I'm going to gladly take that. So keeping up with the large companies here, the next stock that I bought was actually more of Apple. I just bought the big bank, so it only makes sense to buy the biggest company in the world, which is Apple. And unlike Chase stock, this stock has actually done quite well since the C19. It's actually increased almost 50% in share price since the start of the years. A company like Apple has numerous revenue streams and ecosystems. They have just under $200 billion in cash, giving them plenty of wiggle room in case they fall into any hard time. Although I do expect Apple to continue to increase revenues with their phones, their electronics, their wearables, their cloud systems, Apple Music, and all their other services that they have that should continue to generate income for them regardless of how the market is doing. Apple represents my largest position here at just under $4,000 in market value. After their little stock split, I now own 33 shares, just bought another one on Friday. And my returns on this stock, just under $2,000, so very happy with Apple there. And then the next stock we'll be talking about that I bought is more equity in the company that is NVIDIA. So just bought another $100 of equity into them, bringing me to a total of 5.38 shares. I have over $1,000 return on this company as well. It's now past Microsoft for the second largest position in my portfolio. So this company makes graphic processing units, or GPUs, which are needed in video games, and this is an industry leader. It's also doing so much work, guys, with artificial intelligence and data centers, as well as cloud computing applications. Last time we talked about them, I was announcing their Mellanox acquisition, which it now also just announced that it would be acquiring the mobile chip designer ARM Holdings for $40 billion. This is a company that is already a juggernaut, and it just continues to grow and continue to feed off these other companies and just continue to acquire them, and it's going to keep producing great products for the foreseeable future, and it's going to be huge. I can easily see the stock price tripling in value maybe over the next coming couple of years here. Probably the company that I am the most bullish on. All right, I also bought 5 more shares of the real estate investment trust, Medical Properties Trust. They basically do the real estate that hospitals do business on. You can see I have a pending just under $13 dividend from them. Still a little bit negative in terms of capital appreciation, but with the dividends, I'm actually back up positive on them. So they do the real estate that hospitals do business on, owning over 390 hospitals across 9 countries, the majority of them being in the United States. Right now, they have a ridiculous over 6% yields, almost 6.3%. And I'm hoping that the medical field here can continue to do well during this worldwide pandemic. It seems kind of odd saying that, but I know people are choosing to defer their surgeries and hospital visits, so that's probably not great for the actual hospitals, but obviously a very essential part of our day-to-day lives. I can't imagine that going anywhere. I also made my partial share of Visa a full one by buying another $100 in equity into this company. So Visa currently controls 53% of the US credit card purchases volume, which is just absolutely insane to think about. Think about every time that a credit card is swiped, 53% of the time, that's probably a Visa one. And that means that Visa is collecting a small sliver on every single transaction as part of its processing fee. So I basically use a credit card almost every time I make a purchase, unless it's at maybe a Chinese restaurant where there's like a $10 minimum if you want to use a card, and then you have to keep ordering egg rolls till you reach that $10 minimum threshold. So that has happened to me maybe in the past week, just speaking from experience. All right, so Visa is a no-brainer, but this next stock is one that I have never bought before. It's going to be a brand new position in my portfolio. It pays no dividend, but it has out of this world returns in the past couple of years with no signs of slowing down. And that, of course, is Adobe here at $477. Just bought $100 in equity in them. So over the last 5 years, it's up almost 500%. Basically, the company has 5 times itself almost in the past 5 years. Adobe makes creative software under subscription services, basically monthly or annual fees that you will have to continue to pay to keep using their great products. You probably have heard of Photoshop and Adobe PDF Reader. I'm gonna make a more holistic video going over them, so I'll keep it short here, but their year-over-year revenue growth and continued success I see for them in their amazing gross margins, their cash flows. It's just going to be too good for me to keep passing up, which I have made the mistake of not buying into them sooner. And I will continue to dollar cost average into this newest position. So guys, those are the 6 stocks that I bought more of this past week. Now let's get into all of the dividends that I received. All right, here guys, you can see all of the August dividends start to roll in. So NRZ, JP Morgan, SPHD, those actually are not real August dividends. They actually fall under the July tranche. So the first dividend is actually General Mills. So General Mills, I own 4 shares. They pay out 49 cents a share, so that gives out a total of $1.96. General Mills actually, for the first time in a lot of years, actually announced that they were increasing their dividend a whole 2 cents. So they were going from 49 cents to 51 cents. And hey, every little penny counts. And it's actually done very well here in the last year, up almost 10% past 5 years. Relatively stagnant, but it's great to see them doing well during these tough times. Then we have AT&T, a sin stock here at 15 shares, pays out 52 cents per share, $7.80. People always talking about all the debt that this company has, but as long as it continues to have cash flows, they'll be able to continue to pay out that dividend. And then we have MasterCard here at $2.40. So I owned 6 shares of them, 40 cents a share, $2.40. So Visa is a great company, but MasterCard, it is probably their closest competition at that number 2 spot. And I love both companies. Both have done very, very well for me and made me a very good amount of money. All right, then we have the largest company in the world, Apple, paying me part of their profits, which is pretty cool to think about here. So Apple, this is obviously before their stock split. I only owned 8 shares, and they paid out 82 cents per share. All that is now being adjusted, so next time that pays out, it'll be the 33 or so shares that I own. And then obviously the dividend per share is obviously going to go down as well, but it'll still be about the same in terms of total amount of dividends paid. So right now $6.58, and that reinvested into more shares of Apple. Then we have more of not reality income, but realty income here. So at the time I owned 13.09 shares, and they pay out 23.35. I think they had a very, very minuscule fractional penny of an increase in their dividend, which they really basically do almost every month. It just goes up by a fraction of a penny. So they paid out $3.06, which reinvested into more shares of O. And then we have AbbVie paying out $1.18 for a total of $7.17, and that reinvested as well into more shares of AbbVie, which has fortunately went down a little bit here in the last month or so. It's down 10.75%. And then as we continue here, Costco, first time receiving a Costco dividend, 70 cents per share. They only own one share at the time. Still trying to look into some more buying opportunities for Costco. Great company and great membership renewal business model that they have, and bought into a very fractional amount of more Costco. And as I continue to accumulate more shares, that will be more and more significant. Procter & Gamble, one that I do need to buy more shares into. I am always thinking about adding more, but I can never actually just pull the trigger. So 79 cents per share, only a total of $2.39. Then we get to Starbucks here at $4.51. Recently added more into them, so I'm now at 13 shares. So next time I'll get paid for the 13 shares that I own. This time, 11 shares, 41 cents a share for a total of $4.51. So we get into September. This one is really an August dividend for SPHD, a supposedly high dividend, low volatility ETF. Pays out just under 15 cents a share. So got a total of 90 cents in dividends from them. And then as we continue going up here, we also have this QYLD dividend is really for August. So that one is $11.37. I love this ETF. I now own 62 shares of them, and you can just see already have another pending dividend from them. So it's nice to get this monthly consistent cash flow from this great ETF. I love them. And then we have the oil tanker stock here. DHT continues to have a ridiculous dividend payout here. 25 shares, 48 cents a share for a total of $12. So I'm still down on this position in terms of total return, but it really has been paying out this ridiculous dividend. So I'm just going to continue to hold it here in the long run, even if I am really just bag holding at this point. All right, guys, so for the month of August 2020, I had 14 companies / ETFs pay me for a grand total of $69.47. In August of 2019, I made just $16.63, which represents a 317% change year over year. Let's try to keep that going. But remember, guys, small numbers getting larger make big percents. So it really just does show how far the portfolio has come in the last year. Just continue to dollar cost average, just continue to weekly add new deposits into the portfolio, and good things will happen. Just do that upfront research. Buy great companies, stash great companies, and collect cash from great companies. Buy, stash, collect cash. The big drivers of the month-to-month increase were both DHT and QYLD, both double-digit dividends that I didn't even own either of these stocks or ETFs even a year ago, and a lot of my other positions just increased in size. So just under $70, that's not a significant amount of money. I still make more just going to the bathroom at work, and these days it's a lot more working from home, so I tend to take extra trips there. But at the end of the day, it's money that I didn't really need to do any additional work for other than the upfront research and actually purchasing those stocks. Anyway, guys, I'd love to hear about how your dividend growth investing journey is going, and I want you guys to tell me what you think about Adobe or any other questions or video requests that you might have. Continue to support the channel by liking and subscribing, and I'll catch you guys next time.